Hello everyone, this is the Evolving Trader and my name is Michael Robillard, and we have come to part 4 of a basic and effective technical analysis setup. Folks, the reason why we are going through this series is because the Evolving Trader is dedicated to educating people in the stock market. By the time we're done with this series, you will have the foundation that you will need to succeed and thrive in the stock market. Now, before we get going, I know you're probably getting distracted by that nice little like sign at the bottom. Please go ahead and hit that like button. And while you're at it, go ahead and hit the subscribe button too. And also don't forget that alert button so you don't miss not one video in this very important series. Folks, if you can have a plan to build financial stability handed to you, wouldn't you take that opportunity? That's what this video series is doing. We are giving you a financial plan, a plan where you can succeed through the stock market, where you can one day be able to have that financial independence that all of us dream of having, right? So let's go and get started. We do have a few things to go over today. Let's go over the disclaimers before we get going. Folks, please note that this video series is for educational purposes. If you are really serious about getting into the stock market, you need to evaluate your finances to see if what you are able to risk in the stock market, because there are risks involved in the stock market. Okay, now that we got that out of the way, if you want to read more in detail, definitely pause and then, to read everything, but we are about to get this show rolling. Today we are going to go over the two most popular indicators that a trader uses in the stock market. Just about every trader I know have used or uses these two indicators, and it is a very good thing for you to know them and know how to use them as well. We are talking about the MACD. MACD is an acronym that stands for Moving Average, Convergence, Divergence. And then the other is called the RSI, which is short for Relative Strength Index, acronym as well. Hopefully by the time we're done with this series, you will see how these two indicators work in tandem with one another, and how they can help you make great decisions when going into a stock and even when coming out of a stock. So let's go ahead and jump straight here to our platform. For those of you that don't know, this is thinkorswim's paper money platform. I call it the Monopoly Money platform. As you can see here, this is not real money right here. This is all fake. I can actually adjust this at any time that I want, add millions to it if I want. In fact, if you ever want to know how to do that, I'll show it to you easily right here. Adjust cash. There you go. Look at that. Now my account, oh man, if only it was that easy. Whoo, man, wouldn't that be nice? Oh, folks, unfortunately, it is not that easy. It would be nice if we could do it like that, but unfortunately, we got to get back to reality here. So folks, down here at the bottom, I already got them set up here. These are the MACD and the RSI. If you want to know how to get these in your stock chart, I will show you right here. If you are using Thinkorswim, this will be easy to follow. If you are not using Thinkorswim, if you're using another brokerage, I know a lot of people are jumping into Robinhood because it's so easy and it's right there in your hands. Some of these indicators that I'm going to show you, you should be able to get the MACD and the RSI if you're using Thinkorswim. If you're using stuff like Stash or Acorns, obviously you don't have as much control. You won't be able to see as much, but if you're using other platforms that are out there, oh man, my mind just went blank, but there's tons of brokerage where you have a desktop platform. You will be able to find all of these. Unfortunately, I'm not familiar with them. I've been using Thinkorswim for the last 4 years or so, and I am a stubborn old dog. It's hard for me to learn something new. But if you are using another brokerage, you should be able to find these same indicators that I'm about to show you. But for those of you following with me with TD Ameritrade, go ahead and click on that Edit Studies tab, and then all you have to do right here is just type MACD, and you already see it right there. So we're going to go ahead and click on that. If you ever want to get more information on what the moving average convergence divergence is all about, you can always click on that little question mark there and you'll get like a little highlight. If you click on that more details, all that will do is open a browser and get you over to a TD Ameritrade learning website that will give you even more details. Alright, so we got our MACD here. Normally it's lower, as you can see here. I do know some people that put it up on the main chart, but I've never seen a reason to do that. But there is a reason why they do that, because, like I said, this is the one of the most popular ones. Now we're going to go into the RSI. Same thing right here, information right there. I usually keep these lower. Whether one is at the top or the bottom, it doesn't really matter to me. I'm going to click apply, and there you have it. Alright, so now to give you the anatomy of the MACD, let's start with the MACD here. Make this a little bigger here so you can see better. You got two lines. This yellow line is the primary moving average line. I believe this is the 70, and the blue is the 30. You can see the numbers here, 70, 30 moving averages. The 70 line is the yellow line, the longer line that pretty much gives you a more accurate depiction of where the stock is going overall, right? The blue line is the one that you really want to pay attention to. When this blue line is below the yellow line, then that means the stock is definitely on a downward trend, right? So you would not really want to buy any stocks in here unless you are shorting or you are buying put options. You don't want to mess with this. Now, once the blue line goes over, this is where you can start seeing some profits. As you can see here, stock starts going up right where the line starts crossing over, and you can see it pretty much kind of follows the flow. Not 100%. Like I said, there is no system that's 100%, but what the MACD does is give you the best probability for when to go in and when to come out of a trade. Once again, if you just follow the MACD, you can look at this and say, okay, it's going below this line here, it's time for me to jump ship. And as you can see, from here, from this one here to this one here, you really wouldn't have made too much money, but you're not going to lose a whole lot of money, and that's the big thing. Once again, it goes below here. Now, the more inclined, the more steep the line is, the more probability, the higher the probability is that you are going to profit. As you can see, steep incline going up, definitely making profit here. And look at this. Once again, some people, this is all they look for. This is all they look for. If all you do is look at that blue line to see when it crosses over that yellow line, look at that. Come into this. If you came into this candlestick right here, you would make a whole lot of money here. You would have made a whole lot of money. It is really that simple to follow the MACD. And this is, as you can see, one of the biggest reasons why it is so effective, why it is one of the most popular indicators in the industry right now. Okay, so now let's look at the RSI. The RSI is going to give you different information. Normally, you have these two yellow lines here, right? These two yellow lines represent two separate things. When the stock goes above this yellow line, it is a strong indication that the stock is overbought. So many people have bought into it. And once the stock is overbought, people are going to start selling. A lot of people are making their profits. They've reached their target that they were looking for, or they're satisfied with where it's at, and they jump ship, and then the stock starts going back down. This line down here is an indication that the stock is oversold, meaning that the stock the stock is at a discount right here. When the stock goes below this line, it is at a discount. And so you know that people are going to start buying it. They're going to see that it's at a discount, and they're going to jump in, which is going to get it back up here. Normally, when the stock is in the middle here, this is where people would mostly get into it, would like to get into the stock. You really don't want to buy the stock when it's up here, because as you can see, once it gets overbought, it's going to go down. It is going to drop. You're going to see, as you can see here, red candlestick showing a lot of pressure. Sellers started selling. A lot of pressure for the stock to go down. Dropped a little bit here. Overbought again, and then it's gonna, so you know that the stock is gonna go down. Now, there are times when certain stocks will perform in such a way where it'll stay up here for a while and keep going up. That does happen. Trying to see if I could find a good example of that. I think that took place with Disney. Let me see if I could show you that. Might not be able to show it to you. Yeah, unfortunately I can't show that, but there are examples of that. If I could think of one while I'm doing this video, I'll definitely show it to you, but as you can see here, same thing I showed you. And we can go through a few. Let me bring this back down here. Back down so we can take a better look at the chart. So as you can see, it pretty much follows each other. Now, how are you using both of these at the same time? Very easy. Even though this stock is being oversold over here, this is an indicator that the stock is going to start going up. And as you can see, the blue line starts getting closer and closer to the yellow line. A lot of people use these two indicators in tangent with each other, because as you can see, they pretty much flow the same. And then once the stock goes above here, see he's getting close. Once it goes above here, this gives you an indication that the stock is going to start going down. So in a sense, you can use the RSI as a way to kind of predict where the stock is going. Let's look at another example. This is McDonald's right here. See, just following it. Just following the line. Look, see, oversold, bounce back. The great thing about knowing when it's oversold and overbought is that you can almost guarantee that it's not going to stay there for long. Pretty much it does not. As you can see, sometimes, here's an example of it being oversold and it just kept going higher and higher and higher anyway. Eventually it will come down. So some people would like to ride it because they see that the line on the MACD is still above, it's still an upward trend because it's above the yellow line, and they work together. And then once you get to here, once you start seeing this, look at that. Once it goes under, or once the blue line starts going under, then you know it's time to jump ship, right? So you see how these two indicators working side by side is just a treasure trove of information. And they follow, and they're usually pretty solid indicators, which is why most people use them. I have them at the bottom of my charts, but once you've seen my whole setup, you'll understand why I don't really pay much attention to them anyway. But these two right here are real good indicators for anyone getting into the stock market to start. I think I'll go ahead and stop here. I don't want this video to go too long. So this is it. If you have questions, folks, definitely ask down below. I do a good job of answering people's questions. My goal is to help you become a good and successful trader in the stock market. This is the plan that I am giving to you for financial stability and a solid financial future for you and your loved ones. Once again, this is the Evolving Trader. My name is Michael, and I will see you guys on Sunday.